In the energy market, crude oil rallies up 2.2% on the highs from yesterday's close, breaking above that $60 mark. First time we've seen it above that $60 mark since September 17th, which was the day after the attacks on Saudi Aramco by Yemeni rebels, those drone attacks that drove price up pretty quickly, which then got reversed back down. And even though today we were up 2.2%, we ended up shutting down, closing right around 60, but just barely holding on to that $60 level, finishing just below it. It's interesting because we broke above and came back down. We're now essentially at the top of the range that we've been in. But rig counts actually pushed crude oil price back a little bit. Baker Hughes rig counts came in. It's the first time we've had a rise in rig counts. It's only 4 rigs, but it was still a rise, taking us up to 667 now from 663. First time in the last 8 weeks that we've seen a rise in rig counts, and it wasn't much. Natural gas rigs actually fell by quite a bit. The overall rig count ended up being break even on the day. But as I mentioned, despite the OPEC cuts of another 500,000 barrels, we're essentially still in the range, the upper end of the range, but the range that we've been in since mid-May. So you're still not looking at much of a move despite the OPEC cuts going from 1.2 million barrels to 1.5 million barrels. This seems to be reflective of the idea that they're going to basically stick to the cuts and actually comply, but the market doesn't particularly believe that they're going to comply. And if they don't comply after the IPO of Saudi Aramco, Saudi Arabia might actually just pump and drop the price themselves, potentially pushing shale into problem area financially, and then pushing the other OPEC members who had been cheating into some form of compliance. Otherwise, the price could just collapse. So again, still in that range, looking for a reason to break out to the upside. Clearly, we do not have it yet with that rise in rig counts. First time in 8 weeks.